get into the video, 70% of you guys that watch the channel are not yet subscribed. So make sure to click the subscribe button now, give the video a like, and support our amazing guests that are joining the live today. Now, in case you guys didn't already know, there is a big event for Ethereum tomorrow. And joining me live, we have ETH versus ETH competitors debate and conversation. I have Nicholas Merten from DataDash, Kurahashi, Soufe, VP of Avalanche, and Austin Virts, head of marketing previously at Solana, and now also head of crypto marketing at Audius. So guys, first of all, thank you so much for joining me today. How is everyone?
Doing good, Jessica. Thanks for having us.
So good. Doing well.
Very, very welcome. Now, as I mentioned, there is a big event in Ethereum's calendar this week. Nicholas, maybe you can start just by giving us a little bit of context of what we're seeing.
Yeah, so this update, all the while it is really important. It doesn't make too much changes to Ethereum. This Arrow Glacier update that's going to be coming to Ethereum here soon is going to be pushing back the move or push away from proof of work rewards to people who are mining Ethereum with graphics processing units like the NVIDIA graphics cards into proof of stake. So this is going to be pushing that update, which again has been kind of delayed from time to time again on Ethereum as they're continuing to work towards making the large migration from the existing layer 1 towards a layer 1 that's fueled by proof of stake. They've been pushing that back, and now it's set for June of 2022. So ideally, the scenario would be that by June of 2022, once this upgrade or this basically time bomb in a sense goes off, it would be the move towards proof of work to proof of stake for Ethereum as a blockchain, and staking rewards would start to begin.
Awesome. And what's really interesting, and Nicholas, we had a little bit of this conversation before we started the live, is for a lot of us that have been in crypto, we've kind of really been following Ethereum's journey. But 2021 was really the year that we did see some new and some pretty strong competition enter the game. And we have a lot of the guys in the comments now that feel free to ask some questions, our audience that is viewing. But I do want to turn first of all to Austin and just ask, as previously head of marketing at Solana and like kind of very aware of the industry, Solana's kind of roadmap and real business objective and where it positions itself when it's compared to the likes of Ethereum, for example.
Yeah, of course. So I think kind of to preface things, Solana has never seen itself directly as an Ethereum competitor. There's always been a strong ethos from the beginning that there is, as we reach global adoption, plenty of space for all of these L1s to thrive within their own niches. A lot of them serve their own purposes, and they each have specific audiences or use cases that work very well for each of them. I think it's well known that Ethereum was some of the earliest and has a very large and thriving community. Like hundreds of thousands of people are using it, tons of applications, real life use cases. And I think where Solana comes into play is just accessibility. It was always the goal from the beginning to create the fastest and cheapest L1 available. And so through that, you start to see other use cases that might not be currently possible just due to some of the limitations of Ethereum. Doesn't make it bad, it just means that they're different. And so I think as we continue to scale and more people get into the crypto space, you'll see each of these niches carved out, and then users will naturally gravitate towards the one that best fit their needs.
That is a very good answer. And I think you're right that there is the constant blockchain trilemma. And now I want to turn to Jay from Avalanche and just ask you, when it comes to your perspective, how does Avalanche really kind of hold its stance in the industry?
Yeah, I think it's very similar to probably what Austin was saying when it comes to competitiveness. I think right now what we're realizing, at least the people that have been in the space for some time, is there's plenty of activity to go around. It's also right now, I'm just was pulling up some metrics here, but we have about 250 billion total value locked across all smart contract enabled chains. That's still really, really small compared to a lot of major asset classes that don't exist on Web3 right now. And so to have this kind of competitive nature, I think it's healthy, of course. But one thing that, again, the professionals, perhaps more so than not, have realized is it doesn't make sense to kind of bite at the scraps effectively and really want to move forward and actually conquer this ecosystem together, or at least the kind of the traditional sector together. So I think the one piece that we'll add on the Avalanche side is really this idea of interoperability and composability. We want to make sure that all of these different ecosystems can work together, because right now, as it stands, it's fairly fragmented. There are bridges, of course, but then you have the complexities of wrapped assets, and you have 1,000,001 wrapped assets, and what does the average user do with those things? They're not just going to go to a curve pool and use it like perhaps everyone on this call has done many times over. And so I think that's where we're trying to really accelerate the idea of subnets, which can effectively scale blockchain. So our proof of concept right now is with EVM. So that's why, kind of coming full circle, we by design are not really competing because we have the EVM within our architecture. Which is the simple way to describe it, maybe for the listeners on here, is Avalanche currently has Ethereum running on it. It just runs faster. So kind of leaning into what Austin was saying with making it more accessible. And so hopefully we can do the same thing with other chains. And that's where then the interoperability play comes in, and hopefully it's a seamless experience. And that way the user can really decide what they want to do with it, or the project can decide. If there's a solution that works well with one type of architecture, that's great. If not, then there's also other options to choose from. Whether or not it's on Avalanche, I don't think it matters too much.
Cool. And Nicholas, I want to turn to you now, because based on the upgrade and the announcements that you started the conversation with, are you expecting that in 2022, what we have seen, because we have seen huge surges of popularity with Solana and Avalanche alike, are you expecting this kind of dominance and surge of interest to continue in the same kind of percentage ratios for Ethereum against the other two in 2022, or are you expecting it to be a little bit different with the upgrades?
Yeah, I mean, look, I think overall, like Solana and Avalanche both have really interesting technological feats that they've built over the past couple of years. I would say in regards to Ethereum, the problem that Ethereum's had over the past year or so is that it hasn't focused enough on being able to actually lower network fees and open it up to the public, which is, I think, kind of a lack of marketing and also biz dev experience working to make Ethereum just as competitive, or if not usable by everyday people. What it's been hyper focused on is maintaining decentralization and a lot of these great kind of ethos principles that we care about in the crypto space. But stepping back to it, the update that we were talking about, this kind of glacier or delay in the sense of the move towards proof of stake, isn't really going to set the foundation for Ethereum to do well. What Ethereum really needs right now is ways to be able to get people towards what it believes is going to scale the network. So layer one right now is incredibly clogged up, but that shows that people are using Ethereum. It is used, it is in demand. The problem with that is that you can't, as a normal everyday user, pay $5, $10, $50, $100 swap fees. So everyone's solution over the past couple months is, let's just move to layer two. Just get everyone over on layer two or start off on layer two. And that's great. But the problem is that there's a lot of existing users we need to bridge off in order to cut down layer one traffic so that layer two can actually be cheap long-term, right? If layer one is constantly clogged, L2 cost saving efficiencies, even if they reduce things by 95%, it's not enough, right? So what I think we need to see is a couple of various different improvements. So there's EIP 4488. And that allows for the call data function, which rollup providers use like Optimism or ZK Sync to be able to reduce the cost of the storage that they need to put on chain, or the data that they need to actually compress and store on the layer one for validity. So that was one of the many improvements. But one thing that I even proposed on Twitter the other day was this idea where you could basically have a segment of blockchain activity, could be 5%, 10% of it be used solely for L2s or bridging transactions. And if you start to do this, where you can have almost two fee markets, one where it's all focused around L2s and also bridging, making that incredibly cheap, but still keeping the rest of transactions on layer one relatively expensive, or maybe a little bit more expensive than before, then you're able to get GWE, or the price of gas, down dramatically. I think these are the types of upgrades that need to come to Ethereum ASAP, because as Jay and Austin mentioned, we can debate it all we want and stuff about which L1's best, or really, I don't think it's even, as you guys mentioned, it's not a problem with that. The problem is that Ethereum's been way too focused on having a tech aura and expecting people to just get it, whereas Avalanche and Solana have done a great job of being able to get the biz dev side right and make sure that users can actually do what they intended for their chains, which is make it usable. So that's my general take. I think we need to see these improvement proposals, and that would buy the time towards ETH2 for sharding to actually initiate and lead towards much larger scale layer one scaling.
And
yeah,
I wanted to you go
I just
ahead.
want to extend what Nicholas said real quick. And I think he finished that off like perfectly, is that the users at the end, they don't care about the complexities behind the scenes. They want to use something that works quickly, efficiently, and works every time. And everything that happens behind the scenes, like 99% of the population doesn't care and doesn't want to know about it.
I completely agree. And I was actually going to pick up on that as well and ask everyone that is watching, because I am curious to see those that are watching the live stream right now to comment which one that they are using, or if they do have a preference, and also why. And Austin, I want to turn to you now, because I think I read somewhere that someone compared Solana to the Usain Bolt of crypto. And I kind of like that analogy. I thought it had a ring to it. But the past few months, there were some difficulties on the Solana network. What was your take on what we've seen, and how is that going to change the approach moving forward?
Yeah, so I think the Usain Bolt analogy is interesting. I haven't heard that one before, but it is fitting. I think the goal, like I mentioned before, was always to create the most efficient, cheapest, fastest network available. And so I think currently right now, just looking at the live numbers, it's processing about 2,400 TPS. Consistently, we're still seeing an average transaction fee of about 1/1000th of a penny. And so the goal was always to optimize for that. Yeah, there were one or two snags, but I think something that Solana has always been very transparent about is that it's what we call in beta, which just means it's new. It's a new chain. It hasn't been around for that long. I think during the early stages of a lot of the networks, there are snags or small hiccups. I don't think that means that things don't operate well or don't work efficiently. It's the process of building on breaking edge technology. It happens. And what we're doing is we're building overtly in public where everything is both verifiable on chain and through GitHub, and you're able just to see everything happening in real time. And so a natural consequence of that is that when small hiccups happen, they're very public. I think the important part is how they're handled, how they're addressed, and then how they're prevented moving forward. And so, yeah, I think for the most part, it didn't really change anything. The community is growing and is more thriving than ever. The Twitter recently reached 1 million followers. You know, we just had a conference in Lisbon, and things are growing exponentially. And I think it's always been catered around making sure that we're able to bring in as many of the general population as possible and provide them with products and infrastructure to be able to use decentralized technology, and starting to move away from these Web 2 monopolies.
On a side note, and I'm sure the guys will agree, I do want an invite for the next Solana Lisbon conference, because from the videos from who I saw there, it looked fantastic. It looked like a very good conference. And I think what's interesting is when we look at these new protocols that we are seeing, they do almost have a different agility, because they are kind of experiencing and witnessing what Ethereum has put into context, and also taking some of the newer blockchains and almost taking the best of what we've already seen and crafting it in a way that is more suitable to the industry, or as you guys mentioned, just fitting a different niche. So Jay, I want to turn to you and ask, if you look ahead now to 2022, what kind of things are you ensuring that Avalanche and Avalabs really implement moving forward, just to make sure that it is, you know, at the top of its game?
Yeah, so I think the initial response I gave earlier was about maximizing that accessibility. Same thing as Austin mentioned. I think a lot of the L1s that are optimizing for speed, scalability, low transaction fees, I'm pretty sure everyone's thinking the same way. It's just clear and in the most obvious route. Now, that's on the protocol level, at least on the L1 side. So as you kind of go up the ranks of the layers, you get to the application side fairly quickly. But before you get to the application side, you want to actually address the infrastructure, and also a little bit of how the user is basically led down the funnel. So kind of marketing terms here, but also relevant in UX. So when you think about a UX of Web3, the onus and decision-making process is on the user, which is really backwards for something as complex as Web3 is today. Hopefully in the future, it's much more simple. So we're hoping to create this ecosystem that really onboards the new users, not the Web3 initiated or crypto initiated users, from the moment they go from a centralized exchange, or hopefully decentralized exchange at some point, but a centralized exchange to a non-custodial wallet. Then from the wallet, then gives you all the options of the applications that you can interact with. One of the things, this is an anecdotal point, but I'm sure you guys have all heard of it too, with friends and such, but the most fascinating conversations I have are when you talk about Ethereum, you talk about Solana, you talk about Avalanche, all these smart contract enable L1s, and you say, hey, like, what do you use with those tokens? And most of the people that come in from the Coinbases will say, wait, what? You can actually use these tokens for applications? And that to me was really the disconnect, because I was like, well, yeah, of course you can. You have, and then all of a sudden, as I was about to riff off everything, you go AMMs, decentralized lending, like none of those things mean anything to these people up top. So that's where the next probably year, but hopefully the first half of the year, where we're on some pretty serious sprints, we're going to be able to push out these products that really handhold the user from the infrastructure side. So then when they want to use the application, they're not going to have to watch 10 million YouTube videos to figure out what they want to do. They're going to really understand, okay, this is how I can generate money, be my own bank, even take out loans, all the things that we know to be true and useful, but on kind of the, I guess, more mainstream angle. So I think that's kind of the focus area for the next year.
And that's
Jay,
a really nice
you can't make it too simple, Jay. You're gonna knock me out of my job. That's awesome to hear that, man. Very cool.
No, it's true. And I think what's really interesting, we've got the group chat now rolling through with everyone kind of commenting, and it does seem like it's a very kind of a three-way divide when it comes to everyone picking their favorites, as it were. Jay, you've made an excellent point that I think for a lot of us, 99% of us don't really understand the full working mechanisms, and necessarily we don't need to. However, you guys do work extremely hard in actually ensuring that these fundamentals are taken care of. So maybe there's one core element or core feature that 99% of people that are watching the charts for Solana, Avalanche, Ethereum don't actually know of yet that you would guys like to highlight. And Nicholas, I want to start with you actually, because I do know that obviously you do have an extremely popular YouTube channel. So maybe you do see in the comments of your channel, or just any misconceptions or any questions that you do get surrounding any of the conversations, any of the protocols, whether it's Solana, Avalanche, or Ethereum that we are discussing today.
Apologies on mute there. Yeah, I mean, there's a lot of like big misconceptions when it comes to this space. So the first thing, like when people talk to me, because at the end of the day, I'm a YouTuber and people are coming to me asking about the market more than anything and what I invest in, right? And I think the important thing to realize is that there are a lot of great fundamental developments on Avalanche, Solana, Ethereum. There's a lot of great developments on Polygon, on Binance Smart Chain, right? But the problem is that no matter what chain is getting the most traffic or which one's the most usable, the biggest thing that's actually going to drive price at the end of the day, if we're talking about in a purely investment thesis, is the buy side and sell side pressure, the demand and supply existing on the market. And I think one of the really cool things about Ethereum that I really like personally, and which has kind of kept me interested in the long-term vision of it, is that you've got two major combinations of updates to the network. You've got proof of stake, which is going to reduce the annual supply schedule of new Ethereum being generated into the supply and the existing supply, so lowering the inflation rate. And then with EIP 1559, which not only helped to mitigate gas fees to some degree, they'd be worse than they are now, so let's be thankful for that. But outside of that, it would also, it starts to take or subtract some of the fees from the actual existing circulating supply that would originally have gone to miners or validators. And these two pressures are going to set ETH on a trajectory that's going to make it deflationary. I can tell you guys right now, to have a deflationary asset, the second largest in the crypto space, competing alongside Bitcoin and others, that's going to be very hard to beat in the sense of price action, because the supply and demand just makes it attractive. And so long as there's demand from institutions and buyers out there, ETH is going to probably continue to appreciate in price. That's what makes those targets like 10 to 20,000 reasonable. In the sense of like Solana and Avalanche and any other kind of competing layer ones, they do have one major benefit, which is the market to scale. So you take, for example, I think Avalanche, you can correct me if I'm wrong, Jay, but I think Avalanche is around like a $20-25 billion market cap at the moment. And you got Ethereum, which is a couple $100 billion. It's much easier for Solana or Avalanche to be able to double in market cap versus Ethereum, which does give it the room to potentially have higher growth multiples. But again, this is just purely like market numbers and metrics, right? In the sense of the fundamentals, I think that all three chains have a really interesting approach. Whereas I think Ethereum's community has gotten really good on the long-term scaling strategy with sharding, as well as L2 adoption with rollups. At the same time, I have to say the marketing biz dev side is much better on Solana and Avalanche. And those are pretty much the big gaps that are going to determine which L1 wins in the long run. So I'm hoping, it seems like now we're starting to wake up to that on the Ethereum side, but definitely got to give Solana and Avalanche that one.
Awesome. Okay. And Austin, I want to turn to you now. Is there anything that maybe you're aware of from Solana's side that they do offer that maybe a lot of people haven't really noticed yet, or doesn't really get the recognition it deserves? Because we've got a lot of people in the group chat that have made a little bit of money on Solana in 2021, but there must be more to it than just the price that everyone has been watching.
Yeah, I'm not sure if I'm here to talk about the price more, as I feel like that can be a distraction to the core focus, which is actually just building out the protocol, building out the network, and providing value to users. And by a byproduct of that, you see movements in the market. I think things were built from the get-go to create global scale, global adoption, and bring in as many users as possible. And so as a natural byproduct of that, we see things just grow exponentially like we did this year, which was amazing. One interesting point I wanted to make is that a lot of these protocols a couple of years ago were built with a main focus of financial instruments because the financial markets were the most in need of disruption. And so Ethereum back in the day wasn't built for NFTs. It was built to provide decentralized financial infrastructure, to provide tooling to be able to scale decentralized finance. In the past year, the interesting thing that we've seen, year and a half, is the scale of NFTs and the digital collectibles. And so with that, you see a lot of individuals that aren't used to financial markets, aren't used to like complicated technology, and are coming in now and trying to participate in these new markets that are being created because of that. So to answer your question, I think something that Solana has positioned itself really well over the past couple of years is to be able to scale with these new markets. So we see art come in. You saw the launch of Metaplex, where you're able to mint, buy, sell NFTs for a fraction of a penny, which just allows markets of smaller artists to be able to blossom. Whereas on chains like Ethereum, for example, it's not possible for some of these artists to have to pay $40 in gas every time they want to sell some art. It doesn't mean that there's anything wrong with it. It just means that we're seeing these new use cases that are bringing in users that aren't used to dealing with decentralized technology. But I think what we're all working on is creating the easiest way for these folks to come on and be able to scale at that, and then being able to pivot with market demand.
It's true. And I'm based here in Dubai, and in Dubai, we are seeing a lot of new projects emerging weekly. And a lot of them are built on Solana just because of what we have seen. And I know for myself included, I've been very stingy this year with not paying gas fees and maybe not buying as many NFTs as I could, purely because I just couldn't justify the cost of it. So Jay, I do want to turn to you now and ask you the same question, which I asked Austin, which is there any kind of core fundamental focus that you think is overlooked? And also, is there anything that you think is highlighted that you're excited to build on next year?
Yeah, maybe it's a little bit of what Nick was saying about the differentiations between ETH versus Solana Avalanche and maybe a few other L1s where a lot of us actually, especially on the Avalanche side, we have deep backgrounds in ETH for the most part, I think, and maybe a few other blockchain projects. So we kind of lived through, especially, so speaking of myself, I was in the Ethereum ecosystem since right after the ICO. So I've seen pretty much all of the ups and downs, especially the downs because it wasn't super euphoric at that time. And so you really, really remember those moments. But after you realize that, then you kind of realize community is really strong value proposition. And the community can go across chains. It's not really, I mean, of course, there's tribalism here and there, but for all intents and purposes, we're still just people trying to push the envelope of Web3. So what's interesting now is you're seeing a lot of deals and applications coming to alternate L1s from Ethereum, because like you just said, Jess, like you just can't keep up with the thousands and thousands of dollars of gas fees continuously on a month-to-month basis. I've definitely paid my fair share of gas, and I probably still do from time to time. But slowly I've been like, all right, well, this is getting a little ridiculous. And if people on this call are feeling a little bit of the pain, then certainly everybody else who hasn't been a part of the ecosystem is surely not even trying, honestly. And so I think that's where a lot of the innovation is coming through and saying, okay, well, now that we have the scalable platform, we don't have to worry about the underlying backend components. So let's worry about other things that make this experience much better. So I can't unfortunately mention the name because it's under NDA, but there's a project that I actually spoke with in Miami, and the whole experience was vertically integrated from the moment of ACH debit card all the way down to the minting function. And the best part about it, and I think this is a theme that has really started to peek its head out in the last year or so, is you didn't really realize you were interacting with the blockchain. It just was an NFT as a membership pass, and you get access to certain artists' exclusive content. There's a gated chat room, there's gated features, exclusive content, things like that. And it ultimately is up to the creator to decide, okay, well, maybe there's something that he or she really appreciates about the Avalanche ecosystem and community, or the Solana one. And I think, again, this is all about responsibility and onus. The onus should be on the professionals, not so much the users. And that way you can push the growth of the ecosystem much quicker, because then you don't have to think about all these decisions, and you can just basically click deposit and buy the NFT and call it a day, as opposed to all the things that we're familiar with when it comes to blockchain complexities.
I think everyone is nodding in agreement with you there that we shouldn't even know really that you're using a blockchain. It's like when you use the internet, none of us really know how the internet works, but we still continue to use it daily, if not minute by minute. Nicholas, I want to turn to you now, because obviously you kind of are representing the Ethereum side of the argument in this conversation, but our chat is also asking about some other alternatives as well, like Fantom and also like Tezos. And just from your perspective as well, what are your experiences with those two alternatives when it does come to comparing them and faring them against the discussion that we're having today?
Yeah, I know. I've known about Tezos for a while. You also mentioned as well Fantom. I mean, look, overall with these layer ones, and this also goes for Solana and Avalanche as well, all these chains work. Like and as you mentioned, Austin, like, people point out, this chain had this one or two issues, or it's not exactly fully decentralized yet. None of that's the issue. Like, this is software. We're in alpha, beta stage, if not alpha stage, right? Like, this stuff hasn't even seen world adoption yet. I think that the biggest problem overall, like what I've had with those chains, is you either run into one of two things: liquidity, which is now starting to become less of an issue now in most other alternative layer ones. And the second thing is really just like the community, because you can have the best technology in the world, but if you don't have the community of developers building decentralized applications, or at least porting these applications over from Ethereum, if they're EVM compatible chains, and B, if you don't have the users utilizing them, then you can have the greatest tech in the world, but it's just going to sit there, right? And no one's really valuing that tech. So my biggest problem I've had with a lot of these ecosystems is that they're not to the degree of both liquidity and usage that I would find on something like Ethereum probably. But you are starting to see, as we've got Avalanche and Solana, as well as some of those alternatives in Binance Smart Chain, right? There's a couple of other ones out there that are starting to get to that usability point where it's no much better or less than Ethereum. And if anything, you have lower gas fees, right? So I think that, generally speaking, the biggest benefit Ethereum has right now, and I guess this also plays off your previous point, Jessica, because I think I didn't really answer it very well. I think the biggest benefit Ethereum has right now is it has the front runner advantage. It does have a lot of developers, a lot more ecosystem development still than most other layer ones, and even on par market cap as well. But it's not going to always stay like that unless there's some serious changes that are made on being able to get people towards roll-ups and layer 2 scaling. So yeah, that's my general take on it and stuff. I think that, again, there's a lot of great chains. You can build the best tech in the world, but if people aren't using it and they don't hear your story, then it's not going to scale.
Absolutely. And we do have some questions. Austin, I do want to ask you, so someone in the comments is asking regarding Solana coming out of beta, when are we expecting to see that?
Who knows? The beta tag was a brainchild of Toli, who made all of this possible. And the beta tag is kind of just to indicate that it's new and it's being improved. I think there is no set time for that. That has been a tried and true thing since the beginning. And it is mainnet beta until they feel like it's able to be removed. And I think at the end of the day, that's going to come down to the developers and the developer community building out the tooling, the application, the infrastructure. Chase, who is one of the DevRel folks for Solana, is one of the most incredible people I've ever met. And he's been doing such a tremendous job just being on the ground with all of these developers. Solana is built in Rust, which a lot of folks from the beginning had found a little difficult, and is now starting to grow as the Rust community is becoming larger and Rust is becoming a more well-known programming language. And so we're seeing a lot of these really, really incredibly intelligent people coming and building directly onto Solana and bringing their Rust knowledge and being able to scale up applications in record speed. And this is kind of all because of the groundwork that folks like Toli and Raj and Greg and everyone else have set over the past couple of years.
Okay, cool. Well, a big thank you to Kobe for the question, because it seemed like a really good question to bring up there. Guys, anyone else that is watching the live now, make sure you do get your questions in, because I'm going to be quizzing the guys now on some of the community questions that we do have coming through. Jay, I do want to turn to you now, because we do have one question when it comes to, is there any subnet in the making for the Avalabs team, and also about Avalanche Consensys protocol? Is it easier to optimize because it's a new protocol?
I don't know if it's necessarily easier to optimize, but I think one of the benefits of it is just it's an entirely new consensus family. So we're not really reinventing the wheel. We basically created a different solution here, and that's what you're seeing that's scaling and powering the engine of the contract chain, which is where all the applications live. Also the DAG, which is not in an order, and that's on the exchange chain just for transfers. Again, most of the activity currently is happening on the application side. That's strategically done just because it was where we wanted to focus more on. And I think the community has kind of rallied behind that as well. And on the subnet side, so right now the team's working hard to prioritize the development of the subnet so people can use it publicly. To kind of answer the question, when people ask, are people building on it? Yes, but in kind of closed, walled off environments. I don't know if that technicality counts. I don't think it counts in the sense of in the mainnet context for what it's worth, but hopefully next year is when we can see some of the conversations coming up. There's going to definitely be an education period on what this means. Like I mentioned before, it can scale blockchains through VMs. That's one angle. Another angle is you can have customizable rule sets. So if you're an enterprise and you want to reap the benefits of decentralized technology or just blockchains in general, you can, but obviously, as we all know, traditional firms are not likely going to deploy on permissionless systems on day one. They might in some future, but it'll be permissioned or some sort of hybrid where I think they just need to dictate what those rules are initially. So kind of getting their toes wet. And hopefully once we have all these different deployments live, then you have, again, the composability and interoperability factor come in. And that's kind of the final key to create this really, really robust ecosystem.
Okay, awesome. Thank you. And next question, this is kind of open to anyone that can answer and feels that they're comfortable to answer. We do have one question on how to deal with the issue of theft of private keys as experienced by Bitmart yesterday. Is multi-sig enough, or is there any other ways? And that's open to the floor. Anyone can take that.
I mean, maybe one quick stab, pretty basic. But again, this is like the non-security advice, perhaps, is the disclaimer here. But follow the proper hygiene for storing your private keys. I think a lot of the OGs and probably everybody on this call were used to going forth and putting it on a piece of paper, writing it down. Don't screenshot it. Don't copy and paste it in like an email. Don't do any of that ever. Do very traditional methods. And I think the analogy that I've heard a long time ago, and I know people probably use it often now, is it reminds me of Harry Potter's Horcrux. You kind of just need to hide these pieces in various places. If you really want it to be secure, you don't actually have to. You can do what the Winklevoss twins did, where they put in a safety deposit box, come full circle. But again, it's you need to have it offline. Use a hardware wallet. Start from there. And if you're really following those practices, where you're basically treating that piece of paper as securely as possible, where you should be probably the only person to view it, then that should be great. I think the second layer is what you kind of alluded to with multi-sig, where I think multi-sig is a reasonable next step. Because if you like Quadriga is one thing that comes to mind, but a long time ago, Quadriga founder, he passed away in India, and he seemingly was the only one with the private keys, and so all of the exchange funds were lost along with him. That was not an ideal situation. So if you're in a very important role, perhaps a multi-sig is probably a more feasible solution there. So I think that's kind of the basics for me.
Excellently put. And 10 extra points for a Harry Potter reference. Anyone that does Harry Potter or Lord of the Rings references here, they're a winner in my book. We have one question now for Avalanche and Solana, and that is, with so many smaller layer ones starting to grow, can Ava and Sol, how can they keep growing? Again, open floor for either Austin or Jay.
Can you repeat the last half of that question?
Yes. So with so many smaller L1s starting to grow, how can they keep growing? Solana and Ava, the token.
Oh, how can Solana and Avalanche keep growing?
Mhm.
Okay, awesome. Thanks, Jess. Yeah, I think it comes back to kind of what I've been repeating a couple times over this call is that if you look at it, Visa on average does about 1,700 transactions a second. And you figure Avalanche and Solana are both growing to scale to be able to handle 20, 30, 40, 50,000 transactions per second. And so in order to meet that demand, we need to bring over all of the people in Web 2. And I think right now the pie is still large enough of individuals who are using decentralized applications for all of these different L1s to scale. If you're looking for just like actionable steps, I am a community person. And so first and foremost, I'm going to say community, whether it be developer community, builder community, just trader community, speculator community, whatever it may be, like growing your community is by far the best ROI that you can get for anything. Because at the end of the day, the users of the platform and the builders on the platform are the ones who make things scale. The people that work at these core protocols, their job is essentially to help build out the infrastructure and the tooling, and then to get the hell out of the way and let everyone else start to do their stuff. And so, yeah, it comes down to community all across the board.
I just wanted to build real quick on Austin's point. Like, where is that, for example, maybe a benefit for Ethereum to have like still today, like the largest community as of now? It's the same with any other layer one protocol. So for example, like there's networks like Radix, which are one of those examples you mentioned, Jessica, like some of the early stage L1s that are still starting to formulate their community are giving the tools to actually go out and build, whether you're talking about market cap value or just actual size of community. The market value of a token can go anywhere. But in the sense of actually sustaining that valuation long term, it's exactly as Austin said, it's community. So all those L1s are going to have to go through the same. And I know this about Avalanche and Solana. They were built back during 2018, 2019, started out really at a rough time in the market and have come up and built really solid ecosystems. So it's not an easy feat to do. It takes time to build these kind of ecosystems. So again, that's one thing that would probably hold back those L1s is just being able to do the same thing. It's building a solid ecosystem.
Awesome. And now on a final note, because Nicholas, I did want to end with you because as someone that is a regular trader and also an educator on your YouTube channel, when we looking ahead for, first of all, Ethereum's upgrade coming up and that kind of big news for traders that are watching Ethereum price, how should they kind of position themselves? And then also in 2022, are there any different protocols you're looking at right now as from an investor or a trader perspective? Which are the most interesting to you?
Yeah, for sure. So I'll be very candid and stuff about it. I think that Ethereum, like honestly, has for the last couple of months really lagged. The DeFi sector has been very slow in Ethereum. The usability issue has been prevalent with high network fees. But I think with some of these upgrades coming out, as well as ETH around the horizon, again, whether it be the supply and demand side that we talked about earlier, and also some of these fundamental improvements tackling the big usability issue Ethereum has had, a lot of those DeFi apps, I think, will start to be built again on Ethereum. We'll start to get usability back in action. And that's going to set the foundation here for Ethereum to really start, basically, I think, start to outpace most plays in the space. So that's why I'm generally long the Ethereum ecosystem for the foreseeable future. We saw this in the last cycle as well, where Ethereum had actually had its highest level against Bitcoin and its highest level market dominance midway through the cycle back in June of 2017. And I think we'll see something like that now. In between though, in regards to some other layer ones that I'm watching, I'm definitely keeping open to Avalanche and Solana. I think that they're probably two of the leading contenders out there. But for some other alternatives, Radix, as I mentioned earlier, is one that's really exciting. I'm always open to Cardano, but it's been a little bit slow to get out some of the basics around swapping through AMMs. But yeah, I mean, look, I think that in the sense of the user community, I would say that Binance Smart Chain is probably up there as well. It's one that doesn't get talked about much, but I generally think those are kind of the major ones I'd watch, and I wouldn't have too much exposure to one specific play. So that's something I'm looking to diversify away from Ethereum probably a little bit and get a couple other players, especially once Ethereum is kind of taken the stage with its updates and we can find some of those other plays at a discount. That would be my general perspective.
Awesome, thank you. Austin, you did a little bit of a smile there when Nicholas mentioned Cardano. Was that a yay or was that a nay kind of smile?
No comment.
No comment is a comment in crypto, but we love to see it. So guys, a final round of questions for our audience, if anyone does have anything that they would like to add or to chime in. But guys, one more thing that I think I want to ask is when it comes to the next few months for all of you guys, what is one thing that you are looking ahead to when it comes to just general industry trends outside of the ecosystems that you obviously all are focusing on so much? Is there one particular area that you really think is going to strongly move forward?
Yeah, I'll go first here. I am so beyond bullish on the creator economy and empowering artists, musicians, creators to be able to utilize decentralized technology, remove intermediaries, and be able to benefit directly from their fans and provide value directly to their fans. I think we're heading in such a beautiful direction there. And I think the classic saying is a rising tide lifts all boats. And I think as all of these chains and communities continue to add focus on providing these tooling to these individuals who really need it in the Web2 space, we're going to see DAOs, the creator economy, and a lot of these user-owned platforms start to scale exponentially. I'm so excited.
Awesome. Watch
Yeah,
this.
so in that same
yeah, you go ahead.
In that same vein, just to kind of build off of Austin's point, creator economy, super bullish as well. Maybe because I have a creative background, so I think that might be the bias of finally seeing just kind of the opportunities that could come out of this technology has really been eye-opening. Also, I think on the other side, on maybe the traditional side, a lot of these artists are getting excited, but they're not just getting excited about the 10K PFP drops or kind of like the quick packs that we've seen for the last 2 years or so. And of course, that's kind of like that excitement has to go somewhere. So I get it's kind of a necessary means to an end, but that was just kind of to get the industry walking. Now, I think to get to a run is really what we were talking about throughout this entire call is really just figuring out how best to create that experience. And I think one reference that I heard from Jason Ma, he's East West Ventures founder, and he was describing this to me, and I've been using this analogy over and over and over. But right now in Web3, especially in the creator economy, you're basically empowering a million Willy Wonkas, and Willy Wonka then has golden tickets to then invite them to their experience. And as a creator, artist, graphic designer, whatever it may be, you're Willy Wonka in this case, and you want to create your whole world for your super fans. There's of course people that want to come in and tour the entire factory. There's also people that want to just simply wait outside the gates, and that's totally fine for them. And so I think the non-fungible token side of things that could really allow for that to happen. I think the next step is really on how that happens and who's going to be the leader, who are going to be the leaders in the space, both from the technology perspective, but also from the creator's perspective.
Very cool. I love that analogy. I've not heard that before either.
Yeah, it was the first one. Yeah.
Nicholas, what about you?
Yeah, I'll do two quick short ones. One of them that I think is going back to like the topic of DeFi, which to be completely frank, I really missed the ball on NFTs and the kind of creative side of the blockchain economy. For me, DeFi is something I'm really passionate about. And I think that not only we'll start to get more maturing in DeFi, having an institutional on-ramp into the DeFi sector, but also along with that, we're going to start to see more real-world applications of DeFi probably over the next year or two, such as under-collateralized lending. That's something that's really exciting to me, being able to actually take out a loan from all this stablecoin liquidity for real-world purposes and not needing 200% of the collateral, the loan-to-value ratio. And outside of that as well, the second one that, again, I was really kind of shocked I missed on and stuff in the early stages was the play to earn trend. I've been a gamer my whole life. I think that overall, this is, as you guys mentioned and stuff on the creator economy side, this is something that it's even compared to DeFi, has the ability to go much more viral and bring in a whole new wave of users. And I've kind of come to that conclusion over the past couple of months and stuff, being such a DeFi head, I was kind of in my own world and stuff. So I really opened up my eyes to that. And I think that play to earn is something that can't be ignored anymore.
Amazing. Guys, thank you all so much for your insights. It's been really insightful to get a little bit of insight from each of you guys on what you're working from and also what you're expecting moving forward. I do want to turn the attention now to the audience and ask you guys that are watching to comment below which of the three is your preferred choice. We do have one person, Eric, in the comment that said, buy all three. This isn't rocket science, duh. Thank you, Eric. So it's really nice to see that we do have you guys engaging. Let us know your thoughts in the comments and make sure to subscribe if you have not already. If you do have any questions, you can also ask Alex in the description box below. And guys, we'll have to touch base again in 2022 and see how things have fared and how the industry has developed. But it has been an absolute pleasure. Thank you all so much.
Thanks, Jessica.
Thanks, Jessica.